I'm trying to slowly get some money out of a traditional IRA. I'm 72 years old, retired, have quite a few rental properties, and I'm trying to get some money out of that IRA tax free. And I have set up, it's with Fidelity, and I have set up a checking account so I can write checks on it. But still, I think when I write a check, they still consider that a distribution, and it'll come in the 1099, at the end of the year. So how do the best way to give that to my church or something so it's tax-free? I've heard Dan talk about it, and I've never really watched or figured it out.
Yeah, so the way that you do that, it's called a qualified charitable distribution. And all you have to do is you have to be 70 and a half to be able to do it. And you have to make the payment directly to a nonprofit organization. So if your account has check writing privileges, then you can do that. Now, you may want to check with them about the withholding and how they handle all of that. It may set to a default. It may go ahead and take taxes out anyway. And I mean, that's okay. It's not the end of the world, but if you would rather it not happen that way, then you can just check with them on the best way to do that. I do encourage people to do that once they to do all of their giving with qualified charitable distributions once they turn 70 and a half. It's much more beneficial for the people who use a standard deduction than those who itemize, because you can't really count it twice. But the way that you do it, and you're going to get a 1099 for everything that comes out of your IRA. And you want that because you want that reported to the government so that they know when you have required minimum distributions, they have proof that you are taking your required minimum distributions, because there are big penalties if you don't. So if your required minimum distribution is $10,000 and you don't take any of it, you get a 50% tax penalty. So you want to make sure you want that 1099 because you want to know that the government knows that you're doing what you're supposed to do. The way that you account for that, I'm not a tax professional, so you may want to check with your tax person, but the way that you do that, I believe it's somewhere around line 4. It's the line that reports your distributions from your IRA. And you're going to report there exactly what your 1099 says. So if you took out $10,000 and $5,000 went to your bank account and $5,000 went to your church, the next line over asks how much is taxable. So you're responsible for keeping your records and keeping proof that you did the qualified charitable distribution correctly. But your 1099 says $10,000. And you have proof that $5,000 went to your church. So the taxable amount that goes into your taxable income number is only $5,000. So that's how you make sure that you get it out tax free.
And it would not, the 1099 probably would not show that then, is what you're saying. If I write checks to my church or any other, it's just going to show
It
the
absolutely
total.
will not. It's
Okay.
just going to show the total because it doesn't know, it's not going to, they're not going to take the time to verify where, they're not going to know where the money went. They're not going to know if it was a charitable organization. So, what happens, I know with the brokerage that I use, is that when a charitable distribution goes out, you get a letter immediately following the distribution, and it just details where the money went, the name of the organization, the amount, and the tax ID number. Because when you fill out a form, the way that we do it anyway, when you fill out the form, you have to put their tax ID number in there. So you keep that with your taxes. If somebody else does your taxes, you want to make sure that they know that you're doing qualified charitable distributions, because there's not really any forms that you'll turn into them to know that. And then if they don't report it correctly, well, then, even though you gave it, you end up paying taxes on it. So you just want to have that conversation. It's called a qualified charitable distribution, and you want to make sure that they know that you're doing it.